last presentation today is more like practical. So you have these new parties who are coming to the table, payment initiation service providers, account information service providers. But how do you actually make sure that these guys are trustworthy, that they have been registered? We looked at this last year as well. There's actually no real process in place, and how this is going to work. And Brandon has a solution, and they will present to us today. So.
Okay. Good afternoon, everybody. Open banking it's coming as high-speed train. We're hearing great use cases, people coming up with great new ideas. We're going into an open API economy and so on. But I just wanted to change the discussion for the last session today. We've heard the customer-facing side of it, but I wanted to go through some of the issues and so on that are faced by the industry as we speak today. So let me just first introduce myself. I'm Brendan Jones. I'm the Chief Commercial Officer and also one of the co-founders of Konsentus. We're really the new kid on the block. We've only actually been in existence for just over a year now. UK company based in London and in Reading, and we have developed a SaaS-based API solution that allows for third-party identity and regulatory check-in. And this is the issue that I wanted to discuss with you this afternoon. In our first year of operation, you can see we've got some great partners that we're working with in the industry, all who've recognised this massive challenge that financial institutions, some people refer to them as ASPSPs, I'm going to call them financial institutions because it's not just big banks that are impacted by some of these challenges, it's also the very small little regulated organisations who mainly have 10, 15, 20,000 accounts. We've heard open banking is coming this year. We've had some timelines talked to us earlier about major milestones that need to be achieved this year. We're seeing the market move in March to go through a period of 6 months testing before open banking, PSD2 open banking becomes a regulatory compliance requirement as of September 2019. Now, what does this mean in reality? This means in reality that we're trying to drive to an open an ecosystem whereby end users, the likes of you and I, payment service users, have the legal right to share our transactional data with regulated third parties. And the hope behind the regulation is that that drives better financial outcomes for us as individuals and even for businesses. So what do financial institutions need to do to respond to this? The regulation is really quite specific. Financial institutions have an obligation to implement what's called a dedicated interface. And that dedicated interface is the channel by which regulated third parties can come in and access the payment service users' data. Now, anyone that's been keeping abreast of what's been going on in the market will see that a lot of the regulators are trying to push towards an API economy in this respect. And we have a number of different schemes being promoted around Europe that are very much pushing for APIs. So, for example, in the UK, Her Majesty's Treasury is very much giving strong guidance that everyone coalesces around the UK open banking standard. We've heard the Berlin Group mentioned earlier in terms of another standard, Polish API, Slovak, STET, France and so on. So all this various schema out there that banks are having to comply with, either singularly if they're operating in one jurisdiction or maybe across multiple schema if they're in many other regulated areas and so on. Let me just take you through a journey of what an end user is going to experience once we get to September this year. And some of it you'll probably be familiar with, maybe other pieces you weren't. So I, as an end user, am going to sign up for a third-party service, a non-bank service. And I will give my consent to that third-party user to access my data. Now, that could be for account aggregation services, or it could be for payment initiation services and so on. That third party is then going to access the bank's API or dedicated interface, and it's going to provide what's called an EIDAS certificate, and I'll come on to that in a minute, to set up a secure communication channel. The bank then has to verify that I am who I say I am, and if you look at the regulation, that uses a thing called strong customer authentication. And once the bank's actually done that, they know it's me sitting on the end of the line. But here's the really big challenge that all financial institutions face as we move forward. How will they be able to validate and verify that that third party is indeed a valid player within the ecosystem and has been regulated to provide the services for which they're trying to access that data? And this is very, very complex. And this is ecosystem, or infrastructure, I should say, sorry, that's never existed before, has never been a requirement within the financial services industry, but now becomes a core component, underlying piece of infrastructure. So what does that mean in reality? What that means in reality now is financial institutions need to go out to multiple databases simultaneously to be able to, A, first validate that the third-party provider is indeed a legitimate entity within the ecosystem, so I can communicate with them. But how do I know what their current regulated status is? When they were regulated, they may have been regulated to provide a number of services, but things may have changed subsequently. So how do I know that they're carrying those right regulatory authorities, which is a requirement of PSD2? And then, as I've mentioned, there's lots of different schema being promoted around Europe, so the transaction types and the message formats are all completely different. So in essence, there's over 100 databases potentially that financial institutions need to access in real time. So the challenges here for them are really as follows, and anybody that's had the joy of reading PSD2, if they suffer from sleepless nights, will know that actually the regulation itself was written as a piece of technology, neutral technology regulation, in such that it was not trying to dictate any specific technologies. It wanted the market to work out for itself what technology should be used, with the exception of one thing. And it was this thing called an EI-certificate. And this is another piece of European regulation. And EI-certificates are used to be able to prove the validity of individuals within the ecosystem. And many people thought, actually, these certificates alone would be sufficient for a financial institution to be able to identify the third party and ensure their regulated status. However, the problem here is a certificate is really just a snapshot in time. So the process as me as a third-party provider is when I get regulated, I will go off to one of the 70 providers of these certificates and I will give them my credentials. They will validate those with the National Competent Authority and provide me a certificate. But that certificate may last for a year, may last for 2 years. In that intervening period, my regulated status could have changed, and that certificate does not hold those changes. And this is where some of the regulation falls down, because national competent authorities have no legal obligation to inform the certificate issuers if the status of a third party has changed. And indeed, the issuer certificates have no legal responsibility to talk to the NCAs in real time to understand if anything's changed. So you've got this breakage in the process itself. So just using the IDAS certificate alone is not sufficient for validating that the TPP holds the right regulatory status. As part of PSD2, the European Banking Authority was directed to produce a register of all regulated third parties within Europe. And that comprises of payment institutions, e-money issuers, and also account information service providers. And that will be published and will be free of charge. But that's just a flat file. So anybody using that has got to build processing capability to interrogate that data, but they can't even actually work out if the third party is the right person because it doesn't support the use of certificates. And most importantly, what most people haven't recognised is the register itself doesn't include what's called credit institutions. So if I've got a bank who's acting as a third party provider, they actually don't figure in this register itself. So there are pieces of data missing out of it. So an EIDAS certificate in isolation is not particularly helpful. The EBA register in isolation is not particularly helpful. And also the EBA register is not a system of record. The EBA hold no liability for the data that's being held in it. So where is a system of record to know if an NCA is actually regulated? If a TPP is regulated? It's actually in the NCA registers themselves, of which there are 31 of these across the whole of the EEA. Every member state has a national competent authority. And one would hope that they all publish data in the same format. One would hope they all publish the same data. One would hope they all publish it in a standardized language. Unfortunately, that's not the case. Everyone's different. So even if you're going to look at these databases, you've got to search for the data. One would hope that they have online accessible machine readable interfaces. They don't. So the whole process is very manually driven. Now, that doesn't support this open API economy where we're hearing about instant payments being made, we're hearing about people collecting account data and so on. So the register in isolation, no, that's not right, but with the other pieces all brought together, we can start to create solutions. But you can see, hopefully here, that actually trying to identify who these third parties are is a real challenge for a bank, financial institution, in such that things like the EBA register, they're not online, they're not machine readable. You've got certain regulatory scheme databases, like for example, in the UK, we have Open Banking UK, which currently is mandatory to belong to, but then is not mandatory after September. They don't get updated either. You've got national competent authorities where you can't actually automate and get at the data and so on. And then you've got different parties that don't have any legal responsibility to inform others when regulated statuses have changed. So not only am I going out over these 100 databases, things aren't exactly working in a smooth manner. So for every financial institution, this is a major challenge. I mentioned, we're a new kid on the block. We only started a year ago, or came to market a year ago. We've been working on this for 3.5 years. For the first 6 months of talking to people in the market, everyone looked at us like we'd just got off a spaceship, not understanding what we were talking about. But today they're starting to recognise the complexity. We've got some real challenges in the market as we move forward. It was mentioned earlier that all financial institutions should be ready by March 14th for testing. I can stand here and say with a high degree of certainty, only the big banks will be ready. A lot of the small financial service providers do not understand the implications of the regulation and what's required of them. But then the market allegedly is meant to be ready for September. Again, I'm not quite sure that the whole market will move in those timescales. Our regulator in the UK is really quite clear about what it expects of financial institutions in the UK. Unfortunately, I think the regulators across Europe, EBA as well as local regulators, have not been very clear in terms of directing the market, informing the market, indeed educating the market actually of their obligations. So a lot of people are starting to play catch up now, and we're seeing a lot of activity in the market as people recognise the challenges that lay in front of them. The EBA has been a little bit more clear about this, a bit more blunt about this. Non-compliance amounts to breach of law with the resultant consequences for the legal entity, sanctions, fines, and so on. So if anyone in the room today is a financial institution who's got to implement PSD2 compliance and implement open banking APIs, there's some real challenges in front of you. And if you haven't started, then I think speed is of the essence. There's two options that banks can implement against. One is the API solution that I said most regulators are pushing the industry towards. That needs to be really in place by March. There's an exemption process that goes in place in June for the banks not to have to put in what's called a fallback mechanism. But then they also have to implement all this TPP and identity checking services around so they know who the third party is. And this is all about risk mitigation for the bank. Risk mitigation in terms of ensuring they only deliver information to regulated third parties so they don't breach PSD2 and in some instances even GDPR. But even where if they're not going to put in an API solution, they're going to offer a dedicated interface, which could be the consumer interface that they're coming on today. They still need to put in these services to identify those TPPs, ensure that they are legitimate, ensure that they are regulated to provide those services for which they're accessing the account. Because if they do not, and then there are problems at a later date, either through disputes or fraud or whatever, then the financial institution is liable for those transactions. And obviously that's bad for the brand, and obviously bad for the payment service user. I think that was it from me. Thank you.
Thank you, Brendan.